Hello, everyone. I'm just here. I'm going to do a video here. We're going to introduce you to my friend here, Andrew Diabru. And I've been posting about him in the group. He's going to be helping me out with the coaching course coming up in January. He's going to be helping to present a little bit and do a couple of open discussions and share some of his knowledge. How are you doing, Andrew?
I'm doing awesome, Mike. How are you doing?
Pretty good, pretty good. I hear you're
Yeah.
a little tired over there. You're taking care of business over there.
A little tired, but it's okay. It's what is it, 10 p.m. So I had a couple kids, 3-year-old and 3-month-old. So both are in bed, which is fantastic. But yeah, it's long days when you have kids. So
There's
uh,
always
this
something
is
new
the end
coming
for
up,
me.
eh?
Yeah, yeah, yeah.
Yeah, good. Well, Happy New Year. I know normally we might have even gotten together and maybe had a drink or something, but it's been a little bit different this year. But
Yeah,
hopefully it's going to be better than 2020. That's what everyone keeps saying, right?
that's the plan.
So, how's everything been going for you for the investor? Everything's been going haywire with the stock market since the elections. How's everything been going for you lately?
You know what? This year has been, well, 2020 has been, overall, it's been a pretty good year. And I think, for like a lot of people, it's been a good year. Things have been obviously pointing up. So it's been hard to, like, I guess, not have a good year, but
Yeah.
there's still lots of opportunity to mess things up. So, but overall, it's been pretty good. Like, I think patience is key in some cases. You got to be sort of like ready and patient. But when you see your move, like, take it and feel confident in it. But also have an exit plan just in case things go a bit south.
Yeah, I like the way you covered that because a lot of people sometimes just think I want to jump in and they don't even have an exit strategy. And the thing is, if you don't have the right metrics, it's hard to come up with a repeatable exit strategy, right?
Yeah, exactly.
So, um, I mean, right now we've been in a huge bull market. I think for post-election rallies, it's one of the largest post-election rallies ever.
Mm-hmm.
And we then jumped right into a Christmas rally, right? We had our Santa Claus rally. And
Yep.
typically after a really bullish year, people choose to take profits in January or February. And you have an
Mhm.
accounting background, right? They can take profits and keep investing all year,
That's right.
right?
Yeah.
They don't have
So
to pay taxes yet.
correct. So, normally what you see is in, December, if a lot of people had a really tough year, right? So the market was not going in their favor or they made a lot of wrong bets. You'll see a lot of people actually doing a lot of selling, right, between Christmas to New Year
Mhm.
because they really want to, sort of minimize their tax burden, right? So they'll sell the loss and then they'll use that loss to sort of like reduce their tax or get some of that money back. But in this particular year, because the markets since March have been pretty much on fire, and so it's been hard to lose like since March, to be
It's
honest.
true.
um, there's probably a lot of people not in that boat who have big losses, and so as a result of that, you didn't really see this huge sell off in the last week of December. So sometimes when that happens is you would expect to see maybe a sell off in then January as a result, because people still want to get out, but they're willing to recognize the gains in 2021, and then they'll worry about sort of like those taxes not till 2022.
Mhm.
Buy themselves some time, right, and
Mhm.
hope they can kind of like keep going, or they'll just hold, or they'll just continue to hold. But January is what, 6 days in,
Yeah.
and we haven't really seen too much of that yet. I think maybe 1 or 2 of the days there was an actual sell off. Maybe it was only one day.
Well, that Georgia day 2 days ago, we had a huge red candle, but if you were doing proper drawing of the charts, it actually was not really that scary.
Not that scary. So just kind of business as usual. So it seems people are feeling pretty confident still. You look at even like sort of the like the sentiment like meter, and
Yeah.
it's like peaking like this. Like people are just like overly extended.
It's that fear versus greed. It's all everyone's greedy right now, right?
People are greedy, and like people are probably a little maybe too greedy, in my opinion. So I'm actually being a bit more cautious at the moment. So like I
Did you
was
start
telling
taking a little bit of profits?
yeah, so like I was actually taking some profits, and just I still have some money invested in the market, but I've
Mhm.
gone higher proportion of cash because I just feel like something there you know even in any healthy bull market you need healthy corrections,
Mhm.
and the last big correction was really in October. So now you're looking about 3 months since, and nothing really happened in December. Nothing's really happened so far. You
Nothing.
look at the news today, there's a lot of crazy stuff going on in the news today.
Yeah.
So something might give here. I don't know. Like, I feel like we're sort of like treading on, like, it's a bit precarious right now. So I'm just kind of like erring on the side of, I want to be sort of ready for when the next correction comes,
Hmm.
and just be a bit patient, because, and I don't need to like be fully invested, 6 days into the year. It's going to be a long year.
Hmm.
There's lots of opportunities to make your move, right?
Yeah,
A
and I
little bit
think
of a
that's an important thing. I like to say patience pays dividends a lot, and I mean, if you're doing it in a calculated way, that really is true, right? I mean, you don't want to be irrational and emotional and sell too early or sell too late. You want to find that balance and have a plan, like an exit
yeah,
strategy, like you said, right?
correct,
So that's
correct.
basically what you're describing, right?
Bingo. And like, there's, even like when things kind of go south, it's not everything goes south. It just depends. Like, certain sectors are more vulnerable than others, right? So when certain sectors go down, other ones might actually do well. You find, like, typically, as you're like hitting recession mode or right before recession, utility stocks tend to do actually really well. They start to shine. So maybe you want to put your money there, or maybe like a thing like gold or something a little safer, right? Traditionally thought of as safer, but
Hmm.
like that, the election, even the results of the Senate race today, like, that was a surprise, I think, for like a lot of people weren't expecting, um, the Senate to basically swing 50-50, right? This, bingo, these two guys, right? So, but I just kind of like looking into some of the numbers and the polls ahead of time was saying, this is going to be tight. And
I know. Yeah.
in anticipation of that, I started actually cashing out a little bit. And I also thought, if this happens, what are the industries that are actually going to be successful in 2021? And I told myself last night, it's probably going to be like alternative energy. It's probably going to be cyclical type stocks. It's
Hmm.
probably going to be like value stocks.
Hmm.
So stocks actually like value, like, things that like Warren Buffett would actually invest in. Something that is like fundamentally good and fairly solid, but
Yeah.
just undervalued, right?
Stable growth. Yeah.
Stable growth, like kind of boring, steady she goes.
Hmm.
Um, and then obviously like the whole like marijuana like sector, like obviously the Democrats are more open to that in the
For
U.S.
sure. For sure.
And
And that
then you
was
saw it
part
this
of the
morning
election.
when
Yeah,
you probably saw it this
during the
morning.
election, people were talking about that the whole time too, and that was why
Yeah,
that sector of the market went up after the election too.
exactly.
Yeah,
And then lo and behold, this morning after the results came in and the markets opened, you looked at renewable energy stocks like
yeah,
flying through the roof, like not just like, like double digit gains, like instantly 20%, 30% was not uncommon. Same with the marijuana stocks,
they were gapping up. Yeah,
gapping up. Even, the cyclical stocks like GE, which barely moves ever, jumped like over 10%, I think, at one point today.
yeah,
So kind of worked like clockwork a little bit, right?
yeah, for sure. And I mean, we've already been following the EV space anyways, but with the Democrats coming into power, regardless of our political affiliation, we're just talking about business here, right? I mean, they're
Hmm.
going to support the EV market and they're really going to embrace it. So
Yeah,
that's why people are liking that, and as well as the other markets we spoke about, right? But
yeah,
it's funny how everyone was really worrying about this, and we had that big red candle the other day. Then the vote went to the Democrats, which is why people were scared, and the market went up today. And then we had all this craziness here with the Capitol Hill event, and
yeah,
now I don't know, the futures look pretty good for tomorrow,
yeah.
right? So
So
I
I
think
mean, it's
people,
also a bit of like, who knows? Like, it just, at the end of the day, like with stocks, it's just, regardless of, well, at the end of the day, like the stock price comes down to like just basic supply and demand, and ultimately comes down to just like investor
Mhm.
sentiment, right? So what are people feeling, right? Um,
Well, you know how you mentioned too, we were talking about that fear versus greed, and now the meter is all the way towards the greed side. Not that we're calling people greedy, it just means that
yeah,
people think that it'll go up forever.
yeah,
And people are betting up, betting up, betting up.
yeah,
And that kind of speaks to the fact that we've been through COVID, we've been through the elections, we've been through all these things that come up on Twitter overnight that'll cause a stock to drop and all these things. This
yeah,
little riot and this little election, they're pretty small in
yeah,
comparison to what we've already been through.
Oh, definitely. Yeah. These are like sort of short-term, momentary, if you want a time, maybe the week or the
Right.
next, maybe the next month, then
Yeah.
you probably want to be concerned. But, if you're more like a longer term, even like 3, 6 months, some of this is just honestly probably noise
Yeah.
and you need not even worry about it. So,
I agree. No, I agree. And I think that any dip in that type of a scenario would be seen as a buying opportunity. And that's been proven to be true so far. Let's see what happens tomorrow. Right. But
exactly. Yeah.
so, yeah,
Yeah.
no, it's good. And I mean, it's nice to have these back and forth discussions like this. We'll be doing some of this at the training course and be having some kind of open panel discussions. We'll get Mark
Hmm.
Loeffler involved. We'll have some other people involved as well. One of the big reasons I brought you on board is, I mean, anyone listening can tell that you have a background in judging value, and you've obviously applied that to your stocks. And, you have a background through your education and your work that supports all of that, right? I mean, you probably
Yeah.
looked at quite a few balance sheets. Um,
Yeah.
too many. Um, and so that's very useful when you're creating an investment strategy, right? To have that fundamental analysis and be able to create a strategy that'll work over time. And so I think that's where
Yeah.
you'll bring a lot of strength in there. And
Yeah.
so why don't you tell just maybe the listeners a bit about, just briefly about your education and your background and how you feel that maybe that may have been helped you to do your options and do your investing now.
For sure. For sure. So I always had a keen interest in numbers from young, but in university, I did major in finance, so like corporate finance, and a degree like that actually does prime you to come out, and then you would probably take like your chartered, like become like a chartered, like a CFA,
Hmm.
finance analyst, which would then plant you somewhere like on Bay Street or throughout in the U.S.
Yeah.
Also, to actually do like investment. Um, yeah, and investment banking really.
Hmm.
So that's what I studied in school, and in there they teach you all about technical analysis, fundamental analysis, sentiment, like efficient market hypothesis, etc. So like you really get like the grounding. But outside of school, then I actually it wasn't fully for me. I couldn't picture myself actually working on Bay Street per se as a banker. um, Looking good. So then I came out and I did some work, and then I actually pursued an accounting designation instead. So I did my CMA, which is now part of the CPA program. So accounting finance. Most people think it's the same. It's actually a little bit, like actually quite a bit different in some ways. But it's all looking at numbers and how companies work and how they're valued, et cetera. Right. So
Hmm.
that's the education part. And then, work-wise, I currently work at Intuit right now, which is a
Hmm.
software provider of like a fintech company. So for TurboTax and QuickBooks, et cetera, and Mint.
Hmm.
So it's financial software, right, for small businesses and
Yeah.
consumers. And, at Intuit, I spent time working in the finance department, and now I've shifted gears, and now I actually work on the product team. So I work with about uh, 13 or 14 engineers, a couple designers, and together we are building parts of QuickBooks for Canada.
Oh, okay. So you're literally now putting together components of the software that a lot of
Yeah,
people actually are using. That's one of the largest accounting companies around, right? I mean, that's a lot of people listening will probably be using that software.
possibly. Yeah.
Yeah, yeah. So how do you think that background helped you? I mean, that's probably an obvious answer, but how do you think that background has helped you when you're making your investment decisions?
So the background really helps in terms of, like when I look at a company and research a company, like I'll immediately go to like the financial statements, right? I'll look at the balance sheet, I'll look at the income statement, the cash flow statement, um, et cetera. Just and start sizing up, like, is this a good company? Is it looking healthy? Where are they weak? Where are they strong?
Hmm.
How do they benchmark to like their peers? That sort of thing. So that part is not too hard. And then from there, like you try to like layer in sort of like the technical analysis piece, like what are the charts saying, et cetera. And I'll be honest, like in traditional like university courses, they spend a lot more time teaching you about fundamental analysis
Hmm.
and much less time on technical analysis. But
Okay.
uh, I think there's a ton of value in all of it together. I don't think one wins over the other. I kind of think of it as almost like if you thought about like a team, like a basketball team, like the Raptors or the Leafs or something. Like I think of like the players on the court is almost like technical analysis. Like this is like your action, this is your movement, these are the people, like this is what's happening in the game.
Hmm.
I think a fundamental analysis is almost like the organization. So what is the management of and the culture like of the organization? Are they a winning culture? Are they a losing culture? Right? Are they the Yankees or are they the what's a bad team? Blues. Up until we're getting better, but that's how I think about fundamental analysis, though. Like, right? And
Well,
then
the
you
thing is,
sort of
it's almost a symbiotic relationship. They feed off each other. If you learn both and you combine your technical analysis with your fundamentals, which is the whole point of me trying to do this
yeah,
course and bring you on board, is that you bring those things together and you should have better results if you're doing
you
it
should.
properly.
It's just a winning recipe. Like you seldom see like a really excellent, talented team like succeeding with with like a really terrible coach and like organization to support them. It happens. Like
Right.
sometimes you have pure talent and a chart will
Yeah.
have pure talent and it's just going to go regardless of
Sure.
fundamentals. That happens every day.
But
But
Phil Jackson won a lot of championships.
but Phil won a lot of championships, so there's something to be said there.
Yeah.
Or Masai and Toronto, like the culture he's built for the team there,
Mhm.
that obviously is important too.
Yeah, no, definitely. And I mean, there's certain people. I mean, there's Kathy Wood that we talk about a lot. She's got one of the most successful funds now on Wall Street, and
Yeah,
people now trust her. It's not just about the stocks that are being purchased, it's the person
yeah,
choosing the stocks too.
correct. It's the same. Yeah, people following her now, like they won't even like maybe look at the chart. They'll just say like, "What's Kathy buying?" And I'm just
Yeah,
gonna follow her because I've seen her success. Same with Warren Buffett.
sure.
Back in the day, probably still now, but I think
Oh, when he bought Barrick Gold, that went up more than most gold stocks because Warren Buffett was behind it. So people,
exactly. So
right?
yeah, yeah,
Yeah, yeah. No, that's good. So, I mean, in terms of the training course coming up, I'm sure people listening can tell that you're very comfortable with the material and that you're going to add a lot of value there. Why don't you just maybe give a brief overview of some of the type of topics you're going to cover? We've already mentioned, balance sheets and a couple of things. Why don't you
yeah.
maybe just mention what you might be going over there?
Yeah, so to build on that, I think because Mike, you're solid in the technical space, you're gonna like go over that really well. So I'll focus more on sort of the fundamentals that I was talking about. So again, like how to like, at a basic level, like without knowing everyone's, level of knowledge, I'll try to like tailor it once we get going. But like how to like look through a balance sheet, how to look through an income statement, a cash flow statement, how to watch out for specific ratios, and how to compare those ratios to like competitors in that industry to look for value versus something is maybe too high versus too low.
Hmm.
You can also talk a bit about, depending on time, like different ways companies typically raise money.
Hmm.
So there's like there's tons, like there's debt, there's like through raising capital, etc. We can talk a bit about that. What are popular ways, unpopular ways, more expensive ways, less expensive ways to do that,
Hmm.
and what you could watch out for. And we can talk about things too, like that companies do, like paying dividends or stock buybacks, and like why they do that and what effect that could have as well. So
Yeah, because a lot of people see those headlines and they don't really know what does it mean when the stock splits. What does it mean when this happens? And
yeah,
maybe it might be good to talk about some of those things. So
yeah,
it'll be good value there. And then when we do some of those panel discussions, you have two kids in a family. I don't. Everyone's in a different situation. Your
yeah,
investing style, I believe, caters to your lifestyle. And I
hmm
believe that there's people that will be watching and partaking that might be in a similar position to say, hey, maybe that might work better for me. So I want to present
right,
different
yeah.
opportunities for different people.
For sure, yeah. Like just life gets really busy. I'm sure for everyone, but for me right now with two little ones and then also working, I can't be like watching or day trading or anything like that. So like
Mhm.
my strategy is ultimately, look like being patient, finding the right ones, going in, and then not being like super long, like waiting a year, 2, 3 years, but
Right. Yeah.
3 months, 6 months,
Sure.
like
Yeah.
writing it out a bit.
Yeah, and there's a method there too, right? We're going to go over that in more
Yeah.
detail when we go through everything with the course there. But it's there's kind of a short term, a medium term, and a long term perspective that I want to share with people because you don't have to be a day trader. I mean,
Yeah.
most people don't have the ability to, and even if they had the time, I don't know how successful you'll be doing that. There's a different way you can go about it, and I think that's
Yeah.
a big part of what we're going to discuss together. So
Bingo.
I'm looking forward to that.
Yeah.
Okay, well, listen, I'm going to let you get to bed here soon. You're going to have the kids waking you up pretty early in the morning, and you can have a big cup of coffee there, and you'll be ready to go. So
Cool.
thanks for taking the time out with us. Thanks for helping out with the course.
Yeah, no worries.
I'm going to link in your information there with the LinkedIn website there, and I posted the picture of you with your daughter there in the group there, and I'm sure people will have maybe a little laugh and a smile at that one there too. So you like the dinosaur t-shirts, don't you?
Yeah, I do. I like dinosaurs. They're pretty awesome.
Yeah, that's a good one. Okay, Andrew, thanks for taking the time out with us tonight, and we'll keep in touch leading up to the course, okay?
All right.
Okay, have a good night.
Later. Have a good night.